Does the Bank of Canada have any credibility?
Ooh, that's a good question.
Macklem recently came out and said we don't have to worry about a recession. There will be a soft landing in Canada. I'm Jeremy. This is Jerry. Jerry, let's take a look at the tweet first from Tiff Macklem and what he said.
Basically, it's not a tweet; it's just a headline from Reuters. So
Okay.
the Bank of Canada, Tiff Macklem, he met. He actually was at the G20 meeting a couple weeks ago, and at the meeting, he basically said, "Canada's we're gonna get through this. It's gonna be a soft landing. We're not headed toward a." And there was a quotation marks serious recession. We're not heading towards a serious recession.
Interesting.
So that was very interesting considering, this is a man who makes anywhere from 350,000 to 450,000 per year, and who knows what other types of investments and assets he has. I think it's saying that, it's very disingenuous. The average Canadian is suffering, Jeremy.
Well, you actually did some digging or came across the Bank of Canada, not necessarily a balance sheet, but some of the things that are going on their over at the Bank of Canada in terms of the money. So why don't we take a look at that and see if Tiff Macklem is being disingenuous. Let's put that up on the screen. And the main thing that I think we talked about before is right at the bottom, which is total liabilities and equity deficiency. You
Yeah,
want to talk about that a little bit?
this was a balance sheet that was shared. It just went sort of viral from Flex J's during the week last week. He's an accountant, and he shared this tweet, which brought everyone to the original balance sheet. So we're all visiting there. So this is just a screenshot of the balance sheet. And his tweet goes, I'm not trying to scare anyone or anything, but did you know that the Bank of Canada is bankrupt? And he writes, yeah, literally no one in the news is talking about this. Why is Tiff Macklem the governor of Bank of Canada? And you just look at the numbers, and it just points out that it's really 3.1 billion in the hole is what he's saying. So the numbers are there. This is public information for all Canadians and everyone to look at. It's quite shocking. It's there in writing, and it makes us from there. Personally, what I did was from the Bank of Canada site, went to the CDIC website, the Canadian Deposit Insurance Corp, and the numbers there, they don't really look very positive to me at all.
That's funny because they have ads running on TV about the banks being so safe that
Yeah,
they're all covered by the CDIC. Is the is
that's it. That's just
are they
crazy.
underfunded?
When you look at the balance sheets of CDIC, which is the Canadian Deposit Insurance Corporation, that's now going to, uh, you know, take care of and insure all of our deposits. If you look at their balance sheets, they have about 22 million in cash. The most of their assets are these things called investment securities, really
Okay.
obscure. So we have to look into that. What type of security is it?
Okay.
It could be liquid, but when we see what happened really quickly with the whole the Silicon Valley Bank, and how quickly money starts to flee the banking system, to convert that into cash, we have to understand if this is something that can work out really quickly for people, especially if it affects a lot of people, like in the case of Signature of Valley Bank, right? It happens really quickly, and this is what we have to deal with now in a post Signature Valley Bank world. It's
You know,
very it happens really quick.
I think, we started off by asking, should we trust the Bank of Canada? And if 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 Tiff Macklem is saying we're not going to have a recession, and you look around and you say, okay, inflation is beating up everybody, and from groceries to real estate, they can say, oh, inflation's come down a bit. Tell that to people who are paying, twice on their twice the amount on their mortgages. And it's only a matter of time before companies start laying people off. And because inflation's is hitting companies too. It's hitting their margins. It's hitting their energy costs. They've been reluctant to let people go, but at some point they're going to say, it's them, or we protect the company. And I think that as soon as people start losing jobs, I think it's going to be tough for the Bank of Canada to turn around and say there's no recession. So do you think we're heading towards that? I know you and I have discussed this idea of if it's the inflation fight or a crisis. I think we're going to hit a crisis before we actually beat down inflation, or the central bank beats down inflation.
Well, they're saying we're not in a recession. It's going to be a soft landing, but everything that they have said so far has just been debunked from when 2020 the COVID crisis occurred and the banking systems and the economic system started to deteriorate because of COVID. They said, they were quoted as saying lower for longer rates, lower for longer rates.
Right.
And now that's gone belly up. Now it was the whole inflation is transitory. Yes, that was the Federal Reserve, but it was a narrative that was adopted almost everywhere, that
right.
that it would be this inflation, which it's a global phenomenon. We're seeing inflation globally.
Don't forget, Bernanke said that the subprime mortgage crisis was contained.
Yeah, like what happened to that? And then now we're seeing the new narrative is this higher rates for longer, and that is starting to reverse. And things are reversing really quickly. The Bank of Canada is going back to our Bank of Canada, the central bank. They said inflation was coming down. It's being tempered. It's now at 3.8%. But you're right. If you look at the basket, everything is up almost double digits. And if we look at two firms that are actually looking at this, or two institutions, one being Davies, huge law firm. They are reporting business insolvency is on the rise in Canada. So this is not just affecting people, it is affecting businesses, which employ the people, which is a very bad situation when it comes down to disposable income. And if we look at the other institution, which happens to be a credit counseling society, which is an accredited nonprofit charity that helps Canadians solve their money problems. The debt load in Canada has risen to $2.8 trillion, an average debt load of $21,131 per person.
Wow.
So, and then she wrote, her name is Ann Arbor. She's the director of strategic partnerships at this credit counseling society that helps Canadians with their money problems. And I bet you that she's really busy. And she says, when you combine the way the pace of inflation is impacting prices, post-pandemic spendings, and then you're adding in Bank of Canada interest rate hikes, they're compounding the problem. They're making the problem worse with every single interest rate hike happens. And according to the consumer insolvency firm MNP Limited, 59% of us are feeling the effects of these rate increases. So going back to the speech, serious recession, I think it's serious.
Yeah, I think we have to remember that so much of this, first of all, is the fact that we never solved anything from 2008. Secondly, that printing all of that money and shutting down an economy was the worst idea. We've talked about that at length, and now we're seeing the effects of it, of which we told everyone was going to come as a result of this, which is when a government just prints a whole bunch of currency, you're going to get inflation. And so they're fighting a monster of their own design, and they want to keep pretending like everything is fine, because I think that once people start realizing, wait a minute, you guys started all this, and now I'm paying for it for you trying to put it all back in the bottle. We're not going to get it back in the bottle. We have to see a recession. We have to see worse than that if we're going to get it under control. Most importantly, you also need to see governments stop spending money. It's one thing to print money. It's one thing to raise interest rates. It's another thing to keep printing money on the other end, or keep deficit spending on the other end. So you can't be both doing different things. Pretending to be independent and raising interest rates, but not being able to speak to the government and say, you guys have to rein in your spending. But if you need money, we'll print it. We'll print ourselves right into oblivion. So yeah, I think the conclusion today is that We don't believe central bankers. We know they're towing a party line. We know they want to maintain credibility. That's quickly being destroyed. And I don't think it's going to be long before people realize, hey, stop trying to help us.
Yeah. Yeah. And going back to the whole CDIC commercial, I found that very, very worrisome when you're actually making commercials, spending marketing bucks on commercials to calm Canadians down that the banking system and the financial system's okay and healthy. You know, there is a campaign going back to Davies in their latest Insolvency Now issue, talked about the Office of the Superintendent of the Financial Institutions, which is OSFI here in Canada.
Yeah.
They've actually been considering ways to respond more quickly to contain rumors that
Mm.
may cause a run on deposits, because ultimately this is what we're experiencing here at Guildhall. People want to take deposits away from the banks and put it into physical precious metals because it's a reserve away from dangerous financial institutions and situations.
I
So
think
they're actually considering ways to, use AI to prevent, the rumor mill and social media, especially in this digital era, to calm and quell. So if there is rumors maybe on social media that there's a run on the bank, maybe they have a way to control it. So they're really looking at ways and campaigning ways to cool and soothe investors and keeping the fractional reserve system solvent.
when you're talking about all that, I keep thinking that central bankers put way too much emphasis on this idea that it's all trends based on psychology. If you believe there's a recession, there's a recession.
Right.
So I think they put way too much weight on this idea that there's too much psychology. If we can just tell people there's going to be a soft landing, maybe we can bring that into reality. But I think that belies their balance sheets. I think that at some point, what do we like to say? You can avoid reality, you just can't avoid the consequences of avoiding reality. And at some point, it you should be realistic about what's going on, and um, you should know that it's not just going to be psychological of saying, hey, everything's okay, everything's
Right.
fine. No, the reality is that the situation's not fine. The economy is not fine. Employment isn't fine. As you mentioned, the businesses are not doing well. Inflation's not helping, and the government won't stop spending.
Yeah.
So I think that to be Pollyanna-ish about it is there's a time for that.
Yeah.
And there's also a time to say, hey, I don't think that this is going to be all about the fact that if we just close our eyes and pretend that it's okay, that we'll have a soft landing. No, the tip of the airplane, the nose of the airplane is in dive mode, and it's only a matter of time before the next real big crisis hits. So let's leave it there,
All
and
right.
we'll talk soon.